The last part of the calculations for the notional sale event is to work out the actual sale cash flow. Here we've worked out the capital gains tax, we've got an idea of an estimate of what we're going to sell it for, and we're just going to put this together now. Before we do that, I will just put in a tax rate here. We're not doing tax until next week, so it's not exactly necessary at the moment. We're going to take it out later on, but I want to put that in just to illustrate what's going on. So we've got a capital gains tax worked out here, and so we're going to find that we're going to put all that together. We've really got all of the numbers that we need. We've already got the sales revenue, which we've adopted as 314. Again, I'm just using it as an equation. We're going to take off the fees. Again, we've already calculated those. Capital gains tax, we've calculated that. We have to repay the loan. Now the loan in this case has been an interest-only loan. And so what we pay back is what we borrowed, $216,000 in this case. We just again borrow that. So we're getting rid of the yellow highlights. And these are the cash amounts that are coming and going. And so what we have is $314,000 coming in. From that, we've got to take off the cost of selling, the transaction costs. We're going to take off the capital gains tax, and we're going to repay the loan. And so out of the $314,000, we end up with $84,000 in our pocket. Very good. Okay, they're the major calculations. What we need to do now is to put that net sale cash flow into our model. It's going to happen on the last day of our 5th year. So we put that in down here. And that's all good. What we have is a purchase event at time 0, like today. And in 5 years' time, at the end of the 5th year, we're going to have a sale event which is going to net us a cash flow of $84,000 after all of the fees and everything else is all taken into account. I'm going to leave the tax rate in there. Equation has come down to us. What is it? Let's have a look. What we have is E28, which is the before tax cash flow. We are going to be taking off the tax, hence the yellow highlight. So we're going to be taking off the tax when we calculate it. We're not calculating it yet, so that's left out. That accounts for why these yellow highlights left here, and for that matter, why the yellow highlights are still here on row 36. Don't worry about that. And take off E29. We're going to take off the depreciation cash flow. Now, we're going to be doing with that next week, so we won't worry about the equation here, but we're just putting it in to get the equation working properly. Any capital expenditure, in other words, if we decide to replace the pool or change the roof or something, that's an allowance which we're taking account of. And after all of those, we're going to have the net sale cash flow added into the cash flow as well. So that's the calculation. Again, the yellow highlight is there. That will go away when we deal with tax. One last addition that I'd like to get us to look at here is the way that this number comes in, how the total after-tax cash flow works. Because we eventually want to make the project or the model respond to different lengths of ownership, different terms of ownership, different lengths of project. Currently we've got it set to 5. In the finitude exercises, we looked at how to use if statements and lookup statements. So, what do we want to do here? What we really want here is not to have this fixed here, but only come here, like a number to be entered here, if the number of years of the project matches the year that I happen to be in. In this case, I've got a 5-year project. I want the cash flow to happen in the end of the 5th year. So I want that number to equal that number for that number to come in. And so here I'm going to do a bit of an adjustment. I know I end up wanting x8 to come in, that's fine, but I'm going to build an if statement. And again, to bring you up to speed on how if statements work, you can go back to the finitude exercise. The general format, like all Excel formats, it's the function, open brackets, and then the arguments. The first argument, the first part of the function, is a logical test. And the logical test I want here is if the years owned is equal to the year I happen to be in. Now eventually I'm going to want to be able to spread this equation across this entire row, and so I wanted always to source the years owned from the same place. And so up here, what am I going to do? I'm going to make that absolute, and so D7 will always be referred to and then tested against the year I'm in, which relatively speaking is so many rows above the row where the equation is, and that's my conditional statement. After that I will put a comma in, and if that is true, then I will bring in the net sale cash flow, which I will put in absolute terms, because I always want it to go to x8. And if it's false, don't want to do anything, don't want to bring anything in, I'll just have a 0, and that's the equation. Okay? You'll notice we've still got the same answer, $84,000, which is what is in X7. But now it will change. If I change this to, let's say, 3, so I'd sell the property a bit early. Hang on. That goes to 0. And if I fill the equation across, then the number is coming into the correct year. I'll put it back to 5. But it just illustrates what's going on. And it's a bit of fun when you first drive this or first produce this to be able to send it to whichever year you're using. And that's actually an advanced function because your models only need to operate for either 5 or 10 years, or depending on what your purpose is. If you don't want to put in the answer, if you don't want to put the fancy if statements in, that is up to you. It's a more advanced function. However, there's one more wrinkle, and if you want to stop the recording just now and have a bit of a think, why will that not work? I'll go back to putting 3 years in there. In fact, I'll put it back to 1 year to make it even more obvious. And you'll notice we're still getting $84,627 even if I sell a property 12 months down the track. And the point there is that in 1 year's time you're not going to get all that capital gain. You're not going to sell the property for $314,000 whatever, okay, and all the rest of those calculations. They're all dependent on the length of the project, and so far they are not. So let's go through and put those calculations in. We'll come up here to the net revenue for year n plus 1. Currently we just bring in the value, I'll highlight it, in year 6, but I actually want that to be dependent on this number, years owned. How do we do that? It's where we use a lookup table. Here it's a horizontal lookup. Okay. And going back to the finitude look up or just refer to the exercise where we introduce the lookup function. Again, if this is too complicated for you, you're most welcome to put it aside and don't worry. It just means that your model as you build it will not be able to be changed by changing that number. Okay, but let's go through putting in these extra bells and whistles now. The lookup value is going to be the number of years owned. I follow that with a table array, and the table array here is all of this down to the row where we're eventually going to pluck the number from. The number is the earnings before interest and taxes, the net revenue. Okay, and so the first row in this table is the year numbers, so I'm going to compare D7 to the first row. It's the way that the lookup table works. That's all good. And then I want to know how many rows down the table I have to go to pluck out the number I'm looking for. Here it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. And so this number here needs to be 15, and hopefully that will bring back the right answer. Okay, so it's saying if I sell the property after 1 year, the net revenue, hang on, is 19,000. Well, in fact, it's going to be 15 plus 1. What's going on there? D7. The plus 1 does not go there. It goes there. And so I want to compare the years owned plus 1. So I'm going to sell a property in year 5, and so I actually want to be plucking the number from year 6, taking it out of the same array. I still go down 15 rows to get my answer number, and I will adopt that one. Okay, right, and so here, if I have a 1 year project, I'll be looking for the EBIT for year 2, 20,000 for 342, which is what's coming in. I take that up to 3 years, and it's now giving me the correct net revenue, 21,000, which is 21,000. So it's the 3 year project. I take the number from year 4, and so on. And so I'm now able to put that up to 5, and now the thing is working correctly. What that means is that now, because that number changes, you notice a number of things happening. I'm getting EBITs for the 3 years of the project, for a three-year project. I'm getting $69,000 in my pocket, which is less than if I kept it the extra couple of years. No yellow highlights. That tells me that 69,000 is the right amount. And because those numbers are then used to calculate the rest of this, your capital gains tax and your sales cash flow are all adjusting correctly. And so now we've got our model able to respond to different lengths of ownership. That will become very powerful as we move forward.